So, David, how you doing? You
I'm
okay?
all right. I bet you call me David than Uncle Dave. So.
Yeah. So David, aka Uncle Dave, Managing Director of AFP Wokingham. Thanks for joining us today.
No problem. All mortgages have their caps, so normally up to 10% of the outstanding balance that you can overpay whilst you're within the fixed interest rate period. But as soon as you're out of that fixed rate, before you fix into something else, the cap is lifted. So you could, if you did come into some money, overpay without any limits there at all. But yeah, I mean, you've got $300,000 mortgage, overpaying in year one is $30,000. That's a lot of money people can chuck at it to help clear that balance if that's what they want to do.
So, mortgages then.
The high topic,
the
Interest rate.
the interest rates of it. So, what's happening? What's happening with buy-to-let mortgages at the moment?
What's happened? God, put me on the spot here.
Yeah.
Interest rates in general across the board are starting to creep up a little bit more. But buy-to-lets do seem to be bucking the trend. They're starting to trickle down because they were quite high. Interest rates we saw shoot up to 5 or 6% for some lenders, if not more. But we are seeing them come down now. I think your best interest rate out there is probably late threes at the moment.
Okay.
3.8, 3 point something like that. But the arrangement fees are pretty fierce. They're a big percentage of the loan fees. So we're going in the right direction.
Yeah, what are we looking at sort of arrangement fee wise at the moment? What's the norm? What's the norm?
So the fee is a trade-off for rate. So the bigger fee you're going to get, the lower rate you're going to get. So if you want one of those headline rates with a 3 at the front of it, 3.85, whatever that might be, you're probably looking at a 3% fee. So that's 3% of the amount you're borrowing, their charges an arrangement fee. But if you're prepared to take a slightly higher rate, maybe something closer to 4.5%, 5%, you might get the fee at £1,000 or £1,500 flat fee.
Right.
So yeah, it depends what's right for your size mortgage, really.
Yeah, no, absolutely. Because one thing that we were talking about earlier is that we're sort of seeing that banks and mortgage lenders might be trying to help with arrangement fees. Some of the things that we've seen is sort of around 1% that's being talked about now. So do you think that sort of banks, mortgage lenders are taking note and trying to help buy-to-let landlords?
Yeah, I really do think they are. We've got to remember the banks are heavily regulated by the FCA and the PRA, and they have to be seen to lend sensibly. So when interest rates, base rates, swap rates went through the roof, their interest rates have had to go up. But as they go up, the affordability drops. So your actual amount you can borrow on a buy-to-let mortgage comes down because your cost every month goes up. So to try and help with that, they introduced these higher arrangement fees, keep the interest rates low, keep the client's monthly payments low. They can borrow more money, but they have to pay a bigger fee as a trade-off for that. So they are listening. They're trying to now get their head around the regulations and see what they can do to find that middle ground. NatWest have come out with much stronger affordability in the last couple of weeks. Probably one of the, if we're just talking standard buy-to-let sort of mortgages, they're probably one of the stronger on affordability now. Right. And I think one of their biggest fees is about £1,500, $1,499. Right. So they are trying. They're trying to go in the right direction, definitely.
Yeah. I think that's something that through 2021 and 2022, the traditional deposit you'd put down on a buy-to-let would be 25% for most. Yeah. And we just completely lost track of that in the Southeast, where the affordability just wouldn't work if you were putting a 25% deposit down. So with rents going up and house prices being reasonably stable, obviously location to location, that reasonably stable can go in both directions at the moment, but rents are going up and up. Are we now falling back into a place where a buy-to-let investor can do a 25% deposit, or are we still quite a way off that?
No, we're not too far off of that. I would say you might need to go for a 5-year fixed mortgage. The banks are more generous when you go for a 5-year fix as opposed to a shorter fix or a tracker. But the rents, certainly in this area, are getting to a point where, 5-year fixes, you can probably get that 75% loan to value, 25% deposit.
And are surveyors keeping up with the rents when they're doing the mortgage valuations?
Which surveyor are we talking about? On the whole, if we're realistic when we put that submission in, when we submit the mortgage application, we don't get too many down valuations. They do happen. In fact, I've had a couple just last week. But I think the customers were being a bit optimistic with their figures to start with. So if we go in with reasonable figures, realistic numbers, they generally tend to agree at the moment. You might tell me otherwise, but
well, there's the mortgage side of things, which interests me. I mean, on the weekend I rented an apartment which worked out based on what they're selling for at the moment at 6.6% yield. So it shows where we're going back to the early 2000s when 6.5% was a norm in the southeast. It's been down at 5 and 4 as a gross yield. So the rents being so high must be able to push mortgage affordability if that's what they're still using. As you say, if the 5-year fixed give you a bit more flexibility on those affordabilities, hopefully the 25% will come back, because that will give people a little bit more options.
It's pretty much there. I think you're right. The surveyors have had to catch up with the market in a way and understand that this isn't just a bubble that's going to burst with rent prices. I think the more confidence they get that this is almost a new normal, or certainly for a period of time, then they're going to be always agreeing with the rents, and then we're going to have, a much better opportunity to get up to those bigger loan to values. It's almost there, definitely. We've had quite a few mortgages go through with 25% deposits now.
Stuff. Yeah. So residential, we've seen some new stuff happen in the last week or so. Mortgages for tenants, which obviously is something that our landlords will want to know about. The Skipton launched their own product, basically saying zero deposit, 100% mortgage if you're a tenant and you can prove your 12 months rental history. You've said, whilst we're off camera, nationwide are giving 0% interest on further advances. Is there going to be any kind of new stuff going on? I need a better word than stuff.
Schemes.
What is it when something just changes and makes
initiatives?
Is there any kind of new initiatives that are being launched on the buy-to-let side, or is it all residential at the moment?
All of the exciting stuff you just mentioned is happening in the residential world. The buy-to-let focus is on exactly what we've been talking about. Try and drive rates down, try and drive the product fees down, trying to increase affordability for tenants. So I think that's the bank's main focus. There's a huge focus on the green products, getting houses EPC ratings up to A's, B's or higher than they are currently. So there is a lot of incentives that the banks are bringing out to try and help with that. Kensington, I believe, and I will check this is available on their buy-to-let, I think it is, if you can increase your energy efficiency rating by a certain number of points, I can't off the top of my head remember what that is, they will give you £1,000 cash back. So mortgage has started, let's say you have a D rating, energy rating. If you can increase that by a certain amount of points, not even necessarily to a C, but points based, within a certain time they'll give you £1,000 cash back. Right. And I think they're doing that sort of thing on their buy-to-let mortgages as well. So there's a lot of encouragement there to bring your properties up.
So there's stuff out there then that's trying to help everyone and all of that sort of stuff.
Absolutely.
I mean, it seems positive that they're bringing this stuff in now, so you can make changes, get better rates, etc. Get the cash back. So there's some positive stuff out there.
Something the consumer might not realise so much is, up until now, a lot of remortgage products come with free legals. So you're forced into using a bank's preferred solicitor to do the conveyancing when you change lenders. That's been a bit of a headache to say.
Good old day, free legals.
Mike, good isn't the word I would use now. Potentially, but the banks have realised that's just more headache for the customer, more headache and complaints for them. So they're offering a lot more cashbacks in place now. So actually, the free legals are almost a thing of the past. If not, there's a choice with cashback to use your own law firm, or if you're very brave, use their free legal. But that's been a big change since the start of this year, that so many more banks have gone to that bus as well.
Yeah. And then just going back to the 100% mortgage thing then for renters, what have you had a lot of queries come through on that? Or?
We have actually, some friends of ours blog out, I think, and we were inundated with some queries. it's a great scheme for the right person. It's not going to fit for everybody. Essentially, the main restriction we're seeing is that there's two calculations.
Right.
So the first calculation is by Skipton. So Skipton Building Society will look at the amount of rent you've been paying over the last 12 months, take the average of whatever rent you've paid, and then they will run a calculation to see how much mortgage, what size mortgage you can get based on that rent.
Right.
So let's say you're getting £1,200 a month in rent. They might say, okay, a 35-year mortgage, you can have 230,000, 220 grand. I'm not giving you exact numbers here, roughly. Then they do the original calculation, which is an affordability check. So they look at your income, look at your outgoings and assess how much you can borrow based on that. And they'll take the lower of the two.
Right.
So when we're thinking here, this mortgage, 100% mortgage, that's the value of your house, and maybe £1,200 will give you 220, 225. I don't know. You probably tell me, what sort of property would you rent for £1,200 a month compared to what property would you buy for 220,000? You might not be in the same.
Probably losing a bedroom.
Yeah.
But it gets you on the ladder.
Yeah.
And you haven't got to spend all that time saving up deposit. So it's a great product for the right person. Absolutely.
Great. And then was this, so the 100% mortgage thing sort of came out of the blue, really. So was this like talked about before? Did you know that it was coming? Did you hear anything on it, or was it just there were
rumours a couple of weeks before,
right?
But it was only sort of hearsay. It's a good initiative, but it was kept quite quiet for a long time. Yeah, definitely.
Good. Oh, go on.
And the other one might mention there is nationwide 0% interest rate. That's for people looking to raise money if they're doing home improvements that are gonna, again, increase the energy efficiency of that property.
Yeah.
So they're really trying to incentivize people to go ahead and get your solar panels, get more insulation in the walls and lofts, and do everything else they can to increase the EPC. Yeah. And they're saying you can borrow up to £15,000 extra, affordability based. You've got to check that you can afford that much. But if you can, they can lend up to 15 grand on top of your current mortgage. They won't charge any interest on it. That's a very new sort of thought process, I think.
So Nationwide own one of the UK's biggest buy-to-let lenders, TMW, the Mortgage Works. They keep them very separate as trading entities, but what's to stop them, or why don't they extend exactly the same offer to a landlord? Because we all know, as we all know, we're living under a slight threat and a slight dark cloud of the government changing EPC regs up to a C for buy-to-let properties, which I dread to think how many buy-to-let properties sit below a C across the UK, whereas homeowners, to be frank, there's absolutely no regulation for homeowners. You can live with a hole in your roof if you really, really want to, and no one's going to come after you for it. So could they extend the same additional borrowing to a landlord, say, look, you have £15,000 interest free, go and do the changes and the insulation, the boiler, that it's going to take out the old storage heaters that you can't afford to do in cash. I see that as being almost more of a landlord-friendly product than a residential.
I think we will see it happen. Like I said, some of the other building societies, Kensington, have got their own thoughts on that and are doing certain things. Not as generous, but I think we'll see it come. One of the problems, like we touched on earlier, is the rent, because it all has to be deemed affordable. So if you're maxing yourself out with the most you can borrow, up to 75% based on that rental you're getting, to get an extra 15k on top, the bank might not see it as affordable. So I think once we've got that back under control and the affordability is where it needs to be, we might see something like that happen, and maybe even before. So not everybody's topped themselves up to a 75% mortgage. Those with lower loans, it would make sense.
A massive amount of landlords obviously have bought their property 10 years ago.
Yeah.
Property value has gone up 80, 90%. So they're sitting on 40%, or 60% equity, 40% loan. Mm-hmm. But as with a lot of people in the UK, asset rich and cash poor, particularly with the tax situation at the moment. So it's something for me. If you can get onto them, I know you're a powerful man.
I'll pick up the phone when I'm out.
Don't worry, there's got to be a BDM somewhere waiting for your call, waiting for your idea.
It's strange you should say that, because the Nationwide TMW BDM did come in with his notepad and asked us for new ideas, and he was going to take it back to the board. So
There's mine.
There's yours. I'll email it.
Let's have a little say on it. We'll see that happen.
Are you listening to MW? Got a spare seat in the room today. Very welcome.
Come on out.
Yeah.
Good stuff. So buy-to-lets then. So what's the best products out there then? So I know we from Uncle Dave, we normally get a weekly update, best buy-to-let mortgages. So what are the best 2-3 products out there for landlords listening in that they can look at?
I hate specifying rate on these things. God, you're gonna.
By the time I leave the studio, it's changed.
Yeah.
I'm putting you on.
As of today, according to my slightly tarnished memory, we've got the TMW is pretty good across the board. Their rates are good. I think they have got a 3.85 2-year fixed, big fee. I think their 5-year fixed are closer to 4%. I will need to go back and double check 3.9 something. But if you want something without such a large fee on it, you can go to probably around the 4.5% and get a fee somewhere between 1,500 and a couple of grand.
Yeah,
which isn't the end of the world.
No,
if we were talking about this a couple of months ago, you'd have another % on top of all of those figures. So it's not too bad. And TMW still have their 1-year fixed product, which I believe is circa sort of 3.69. Really good rate.
Yeah.
But with a big fee attached, again, a 3% fee, it's hard for me to recommend that to anybody because in 6 or 9 months, we're going to be having a chat with that customer saying, right, your mortgage is up for renewal. What do you do now? And there might be another arrangement fee to pay. It's just very regular reviews with a lot of costs involved each time. I'm not comfy with it. But again, it's a place in the market. If somebody sits there and thinks, we're going to be out of all this and in a better place in a year, maybe they'd choose to go for that.
It's the gambler's option.
It is. And it's a low rate, which means the affordability on that product is probably the best you're going to get. But once you top yourself up to that level, what other choice have you got? You might be stuck there.
It's a lot of fees a lot of the time, isn't it?
Yeah.
Where are we on interest-only mortgages? Where do we stand? Where's the land lie?
Buy-to-let? Buy-to-let?
Yes.
Absolutely no problem whatsoever. I would say majority of landlords are opting for interest-only mortgages with the facility to overpay. A good thought process is take the interest-only option, overpay whilst you've got a tenant.
Yeah.
Then if you don't have a tenant, you can just go back to your low interest-only payment. Gives you the best of both worlds. So absolutely, that is probably the bread and butter of the buy-to-let market.
Yeah, I've been speaking to a few clients recently, and they're talking about the interest-only option, as you say, the overpayments. If they've got the extra money there, that's what they're doing at the moment. That seems to be the normal thing that
absolutely
clients they're doing.
All mortgages have their caps, and normally up to 10% of the outstanding balance that you can overpay whilst you're within the fixed interest rate period. But as soon as you're out of that fixed rate, before you fix into something else, the cap is lifted. So you could, if you did come into some money, overpay without any limits there at all. But yeah, I mean, you've got 300 grand mortgage, overpaying in year 1 is 30 grand. That's a lot of money people can chuck at it to help clear that balance if that's what they want to do.
Yeah. I've always liked doing that. It gives you the flexibility, as you say, is if the property is empty for a specific amount of time, you can just drop it down to the minimum. If you pull the tenant out in order to change the kitchen and the bathrooms and your spending's going through the roof, or you can drop the mortgage payment down, you're not going to get penalised for it. And you're not really going to feel too bad on the compounding interest either. So it's a good way of short-term cash flow. For the
gives
property.
You control, doesn't it, over the mortgage rather than the bank.
And I think a lot of people are doing that at the moment on residential and buy-to-lets, is that if they can overpay anywhere, they will do that. Because effectively that will help them out further on down the line.
Now that interest rates are much higher than we've seen for a long time, people are sort of gulping at that and they want to clear those mortgages quicker. NatWest have helped out. They've recently increased their overpayment limit to 20%. One of the only lenders out there that have gone from 10% overpayments to 20% in a year. So I think they're along the same thought process. People want to clear this loan as quick as they can. Let them do that.
If you're in 20%, you're going somewhere.
You're doing it right. Oh, you're playing all right. You'd be a good friend of mine.
You're doing all right at 20%.
And then crossing the divide into company buy-to-lets, where we had a trend that company buy-to-let mortgages were slowly chipping away to almost match those taken in a personal name. Where are we now?
They're still higher than personal buy-to-let mortgage rates, I'd say you probably get your starting point around the 4.5, late 4s, going up to late 5s, again, depending on the fee and the lender involved. They still have a very big place in the market. A lot of people are choosing to go down the limited company buy-to-let road for tax reasons, things I can't really go into. But there's a lot of pros and cons for thinking about each way. So, yeah, still a lot of activity out in that arena.
And are you seeing more of your clients moving their buy-to-let purchases into a company, or what's the percentages where if you put your finger in the air and took a straw poll with no data?
Thanks, Mike. No, all jokes aside, I'd say inquiry-wise, probably 50-50, if not slightly weighed in the favour of the limited company buy-to-lets. Whether they proceed once we've sort of threshed through all of the pros and cons is a different matter. But the amount of people that have spoken to their mate down the pub, had a chat with the accountant, and they've got all these wonderful plans and been told the benefits of it, then we'll have a bit of a conversation and explain the cost involved in the mortgage. I would suggest that if your long-term plan is to become a property investor and you want 4, 5, 6 properties under your belt within the next 5 or 10 years, go limited company. We don't know what's going to happen. The government might button up all the little loopholes or benefits at the moment, but right now that's good. If you're just going to be buying your first buy-to-let, you don't think you're going to do anything else in the future, maybe the personal option is better. But there's lots and lots of factors to consider. So not plugging myself, you should talk to a mortgage advisor before doing anything like that.
Yeah, coming in a couple of weeks as well. We've got Diane from Styles Accountants who's going to talk us through, again, the benefits and the pitfalls of doing a buy-to-let in a company name and the changes to corporation tax rules that have come in this April. So if you run a successful business and then start a buy-to-let business as well, how that's going to affect both businesses. So keep the subscription button on if you're that person, if you're that plumber who's got 5 vans on the road and you're going to put your profit into buy-to-let, hit the subscription button on that one.
Absolutely. So just going back to buy-to-let numbers then. So what numbers are you dealing with at the moment, sort of buy-to-let queries coming through? You know, is there a high number there, or have you seen it sort of come down a bit and people not taking the option?
Yeah, it did drop off probably end of last year towards the start of this, but it's picked up again. Certainly the bigger landlords, I think. So, I mean, you say big landlords compared to some people. I've got people that have bought 10 properties or more.
Yeah.
And I think they're seeing some opportunities out there now where smaller buy-to-let landlords might be selling up and they're grabbing some of these properties and trying to increase their portfolio. So some of those type of clients are probably opportunists and actually grabbing properties, buying more. Whereas maybe your accidental landlords that did a let to buy or inherited a property that's let out and things like that. And, they weren't ever really for any business reasons. And they're just thinking, this is getting a bit tough now. They're probably going to be the ones that are getting out of it and selling the properties.
Yeah.
In a nutshell, we did see a decline. Now we're back up. My business personally is probably about 25% buy-to-let, 75% more residential. So we're back up to our sort of pretty standard numbers as far as that split's concerned now.
That's good. It's good that you've seen an increase come through. I think we see more property on the market now where you can sort of grab a bargain, especially if you're sort of in the buy-to-let, with these other landlords that are selling up maybe a reduced price than what the property's actually worth. And you've got your bigger buy-to-let landlords coming in, finding that bargain and then adding to their portfolio. So
they're remortgaging some of their properties that have got a lot of equity and the rents have, like we said earlier, gone up and they've got some affordability there, pulling some money out, have 100 or 2 then extracted, 102,000 extracted, and they'll go and buy something. That's their business plan.
Last point on the market is I read an article last week which said auction properties or properties going to auction have gone up 40% in 2023. Auction providers have gone online, which has made them a lot more accessible than the old auction rooms in London or the regional centres since pre-COVID, which means anyone can access, anyone can join, anyone can watch. So I think they've had a huge success. And now the market has changed and people are now seeing the maturity of their mortgage rates. People are now having to go to auction, which means a landlord has more opportunity. Give us a quick rundown if a landlord wants to buy at auction, or the newly formed phrase of secure sale. offered here. No, secure sale. So rather than an auction room, it's a timed auction, which will be a marketed property, but you're exchanging immediately with a 28-day completion. I don't know if you've seen an uptick of the people taking that up, and what, as a landlord, do you need to do in advance with your finances to put yourself in the right position?
I strongly recommend you do not try to buy an auction property with a mortgage. And that's just been ground into me from old, where it's almost impossible to meet their timeframes. So get a lot of money in the bank, Mike, I guess, by cash. And without any jokes, I think the point you made there is where you exchange almost instantly, if not within a number of days, and that hammer going down, you're then committed to buying that property.
Yes.
So if there is anything that causes a problem throughout the mortgage application process, credit searches, property valuations, affordability, you might not get the mortgage, and then you're in trouble because you've exchanged contracts. So it's a very risky game. And you've got to try and meet their stringent timeframes of 28 days. That's just another layer of stress on top that a lot of lenders, if they realise it's auction, they might just turn away. I think a lot of the things are you don't know the condition of the property, you haven't had that survey done. It's a very, very risky game to try and purchase an auction property with a mortgage. I would always suggest probably cash buyers in that situation. But I'm a steady Eddie. I'm a cautious person, so maybe that's not everyone's attitude, but that's my personal.
Certainly, that's from a simplicity point of view. If you can go ahead with cash, get the property under your belt, and then what? Yeah. There are lenders out there who will then refinance pre-6 months. You don't have to wait the full amount.
Yeah, you call that a day one remortgage. So there's a handful of lenders out there that will let you remortgage that straight away and release your capital. Most of the banks are going to want you to wait 6 months before you refinance, but you can get your money back out. And like we were talking about, the portfolio landlords, people with other properties that might be able to extract equity, or if you've got equity in your main home and you want to extract some of that and buy a buy-to-let. If you've got enough, you remortgage some other properties, get the cash, and you can buy your auction property cash, and then again refinance in the future and release that back out.
Nice. Right. I think that's it.
We've extinguished it. Dave's sweating.
Dave, thanks. Thanks for the spot with stats and all sorts. So yeah, he's ready to get out of here. But no, Dave, thanks for coming in today. Yeah, it's great to hear about these additional things that mortgage lenders are doing. Buy-to-let numbers sort of increasing as well. The inquiries that are coming through. So yeah, it's all great to hear. So we'll put your details on this page. So
thank you.
Ladies, gentlemen, if you need any mortgage advice, get in contact with us, get in contact with Dave as well. Happy to help. And yeah, see you later.
Thank you very much.
Thank you.